Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, June the 20th, 2025. Let's get started. We'll sort off by week here. Oil up at the top of the list here. That's been pretty weak for a long time. You can still see negative, bigger picture here, but again, everything in between. Stocks down a little bit in the past week. I was missing last week. Talk about that in a moment, but let's just dig in here. The S&P 500 has gone through what is kind of like a V bottom. Okay, so again, V bottoms don't usually happen very much, although to be honest, we've had several in the last several years. And again, so this is just part and parcel of being an investor. Again, here's the tariff war begins. Markets have bounced back, so the S&P 500 remains just below where those prior highs were early in 2025. You can see in the short term, right, there's an RSI 5 bearish divergence, which is where the indicator is making a lower high compared to the market here in the short term. So again, just to me, that's a short-term momentum kind of indicator here. So again, nothing bigger picture changing, but at the same time, I think it wouldn't be surprising at all to see here some sort of drift or at least some consolidation. Let's look at breadth a little bit here. So again, the stocks over the 50-day moving average, 63%, that's healthy. But underneath, you can see here, since the late 2024, we have deteriorated and we have not improved significantly. I usually like to see that 60% line where we've got 60% of stocks over the 200-day. Right now, we continue to sit at 45% despite the rally. And you can see there again, just kind of when you're zoomed out, the lower high that's happening right now in the S&P 500 so far. Let's look at sentiment. I think this is so important, right? I've referred to sentiment before, and I just decided to plot these this morning. Just looking at the AAII survey, it's a survey of institutional investors, and I just want to kind of point this out. So remember, there's bullish and there's bearish and there's neutral. Okay, so there's the middle part of which I didn't bother to plot. But if you look at early 2025, here's the market at highs. You got 43% bullish, 29% bearish. Then the market falls considerably, and at the bottom you've got 28% bullish versus 59% bearish. And now suddenly, as you can imagine, after the V bottom, after all the excuses, all the narratives, all the headlines, all the fear mongering, essentially, the market bounces back in V bottom style, and now essentially we have people coming back to the bullishness. I just want to continue to encourage you to realize this is what happens to us, right? Emotions attach to our decision making, and they attach to our perspective and our lens. Very, very important to stand aside from that. Let's look at the Toronto market. I'm going to touch in again here because the Canadian market has been strong. Now, again, it's not full of strength as far as I'm concerned, but on the left side, we've got the EWC, which is the US listed iShare Canada. So we think about that as through the lens of a US investor. You can see this is the new uptrend, okay? So higher highs, higher lows. On the right side, we've got it from the perspective of being a Canadian, so that's XIC in Toronto. And here again, versus the Canadian index, we're outperforming, but we're only outperforming and going up in the short term so far. Bigger picture, the value versus growth kind of character of the market tends to have a lot to do with whether Toronto outperforms. The reason is because Canada and Toronto market has a lot of financials and it has a lot of materials and energy companies. And so again, although the Toronto market is no doubt about it at highs, when you look again zoomed out here in the last 10 years, you can see this Toronto outperformance is really at this point just a short-term kind of situation. And I think there's lots more work to be done because the value versus growth is making a basically low, multi-decade low at this point. So let's continue to keep an eye on that. European banks have been very, very strong. Europe has been very strong. Everyone, of course, got talking about international markets. And now, of course, we're losing some strength here. Again, left side, we've got the weekly. So we've got a 2 week so far pull back. On the daily side, you can see we are pulling back here into that breakout level that took place after the tariff sell-off. You can see the relative uptrend versus financials. That's still an uptrend, but relative to the S&P 500, that is no longer an uptrend. Now, I'm talking again, just in the last couple of months, but I just encourage you to remember that, as everyone started talking about international markets earlier this year, and this is exactly what happened, headlines, analysts, and certainly investors, suddenly what we have is a situation where, wow, the US comes back and it's actually got a fair bit of relative strength. So again, we need to understand and remember that time frame matters. Short term can turn into intermediate term, can turn into long-term trends and vice versa. So look at a couple miners here on the left side. Again, I've got lots of clients out west that will be certainly familiar with Teck Resources. You can see in the last 5 years of price performance, you can see actually in the last 3 years, you've basically gone nowhere. We've gone sideways. This is a downtrend on the right side of the chart. Just give you a counter example, of course, that we're used to from our portfolios, wheat and precious metals. Certainly very different, camp here, right? We're talking about a streamer of precious metals versus an operating company that deals with all kinds of metals, including lead and whatnot. But the bottom line is that one is in an uptrend, one is in a downtrend, and this is what happens in markets. So even in the same sector per se, we can certainly have uptrends and downtrends to sort out. This is NVIDIA, of course, one of the largest stocks. You can see here where it is right now. We are, like the market, below that kind of, the high that got made into the last part of 2024, and we've still got kind of what we'll call this horizontal line here, which really comes from that biggest bar against last summer, a year ago, right? So this is a stock that really hasn't done much for a year. Again, it's certainly come back in V style like the market, but at this point, it's what we want to see is which stocks are making highs and which aren't. Okay, so here's a few stocks from the All Sync portfolio that are sitting on the Toronto market. We've got Fairfax Financial sitting at highs. These are weekly charts. That's good. Constellation Software has been another long-term leading stock. Again, this is a pullback in an uptrend. And then we've got Intact Financial also, again, very strong looking chart. The relative trends in this case, I usually plot versus the US market, but because we've got some strength in Toronto, I plotted versus the Toronto, and those are all uptrends for the most part. Let's look at a couple of other kind of large cap stocks here. I pointed out Broadcom many times. These are certainly holdings that clients are aware of from All Sync, and these are a couple of actually 3 technology stocks and 3 essentially semiconductor stocks. So let's take a look. And so this is Broadcom. Broadcom made new highs. That was the first of the big stocks to make all-time highs. So when a market comes back, right, bounces back from weakness, and we see all-time highs, that's very positive, right? That means investors were interested for sure, and they want to buy those shares. They want to pay higher prices. KLA Corp has also made new highs this week. That's actually very positive, and we already talked about NVIDIA. The reason I've got these lower red circles on here is because all of these stocks made a lower low, right? And this is what the market did too. So again, investors will come back to certain areas, certain stocks, and again, certain markets. And so we always want to be aware of our choices as investors, right? Uptrend versus downtrend, strong versus weak, and so forth. We'll finish off with Sector Watch here. The energy stocks are up at the top here, just kind of following crude oil bounce. Maybe I'll get into that next week, but the bottom line is we've got everything, and banks down on the lower part of the list. And last week I was actually at a motorcycle rally down in Port Dover. There were more than 100,000 motorcycles, which was just really, really impressive. I actually couldn't believe it. Every which way, every which direction, motorcycles coming and going from everywhere. And it really was quite a fun event to participate in, which happens every Friday the 13th, and it happened to be a beautiful day. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.